Hi there, it's Ryan G. Wright with DoHardMoney.com, and I'm coming to you today with a question of the day. Every single day I answer a question, and today's question is, are mortgage lenders state specific? Great question of the day. We're going to be answering that. If you have a question of the day you'd like to have me answer, please type it in the comments below, and I'd be happy to answer it as one of our questions of the day. I'm standing here in the lobby of Do Hard Money headquarters, where we've got this killer front desk that looks like a bunch of 2x4s that are stacked up here, and we also have the siding type look. We've got it open and exposed. Anyway, we love this place, but I wanted to give you a feel for what we're doing here. But let's answer this question here. Are mortgage lenders state specific? And the answer is, it depends. They typically are going to have certain territories where they're working in, but we got to talk about two different things here. You're going to have investment lenders, like hard money lenders and private money lenders. They're not going to be lending to owner occupieds. They're going to be lending to investors. So they typically, in most states, I would say 80 or 90% of the states, they fall under a different set of laws and rules than you are dealing with traditional homeowner lending. So with traditional homeowner lending, there's specific licensing that needs to take place in order for those loans to be given, and those licenses are specific to certain states, and you've got to be licensed in every state that you're going to be practicing business in. Now, the same person could be licensed in multiple states. The same company could be licensed in multiple states, but they typically are licensed in one state. Some of them may be licensed in multiple states, but they're territorial. There's a few like monster companies that are licensed in all states, but for the most part, a loan officer is going to be licensed in a specific state. The company they're working for may be in one or a few different states, but there is licensing requirements of that. Now, most of you that are listening to this are actually real estate investors. And so when we're dealing with real estate investors, we're dealing with non-owner occupied properties. See, what's happening is the bureaucrats, the government is basically saying, hey, we want to make sure there's all these additional provisions and standards and requirements if you're lending to a homeowner, because we want to protect or give more protections when we're dealing with a homeowner. But when we're dealing with an investor, they're big boys. They should know these things. They are taking on additional risks. So there's less requirements in that, and in some states there's very little requirements when it comes to lending to investors. And so in most of those cases, those investors don't need the same type of licensing. They're going to need general business licensing, but not mortgage licensing for each one of those states that they're conducting business in. You'll find lots of these hard money lenders have certain properties or territory or certain areas or territories where they're wanting to do business in. Like for example, for us, I think we're in 12 or 15 different states that we're actually doing hard money lending in, and we typically are dealing with major metropolitan areas within those states. So that's kind of what you're looking at as far as where it comes to hard money lenders. They're going to be different because the licensing is different as compared to getting a homeowner transaction and dealing with somebody that's going to get you a loan from a bank. Because again, with a hard money loan, those funds are actually coming from private investors. They're coming from capital. They might be coming from warehouse lines, but that's different type of funding than what you're dealing with when you're buying a house or you're getting a type of FHA loan. So the question then is like, how do you find lenders that are going to actually meet the needs that you have? And first thing is, you got to really understand what you have and what you need. If you're wanting to get a home on a property that you're going to move in and live in, if the property's in good condition, you're probably going to want to go to your bank or your credit union. I like to go to credit unions for those types of things. I find credit unions, you can typically get better pricing. So if you bank with a credit union, start there, ask them some questions and see what they can do for you. Now, if you're dealing with an investment, that's a whole different story here. See, the reason why hard money exists is because if a property's not in good enough condition that it can qualify for a traditional bank loan, then it's got to be sold to somebody that's paying cash or getting hard money. And it doesn't take a lot. If it doesn't have appliances, if there's cracks in the driveway, if the slopage is towards the house instead of away from the house, if the roof has disrepair, if there's leaks, if the HVAC is not working, if the light plugs are exposed, those types of things and about 50 other pages of these things can qualify it so it does not qualify for financing. Now, once those things are fixed, if it's in inhabitable and good condition, then it can. And that's where a lot of real estate investors come in. They take a project that can't qualify for traditional financing. They buy that property, so the person that has it can get rid of that, whether it's a bank, an individual, whatever the case is, and then they improve that property. They buy it, they take on the risk, they improve that property, and the goal is to sell that property for a profit. So they're basically taking over that risk, and then they'll sell it to somebody that's going to go to that traditional bank, get an FHA loan, purchase the property, they get paid off, they get to pay back their hard money lender. That's basically what's happening. So to find somebody that's doing that, you've got to look around. It can be difficult to find a good hard money lender because most hard money lenders are expecting really good credit, lots of experience, and lots of money down. So you've got to be careful with that. So one of the first things you want to ask people is what type of loan to value do you do? Loan to value is how much they're willing to lend. So if the value was $100,000 and they were willing to lend 70%, that would be $70,000. But the real catch here is, what is the value based upon? Are they doing the purchase price? Are they doing the as-is value, or are they doing the after repaired value? Those are three different things, because you might be able to buy a property for less than it's really worth, and you might be able to buy a property for a lot less than what it's worth on the after repaired value. So you got to find out, is it after repaired value, is it purchase price, or is it as-is value that you're lending on? So that's a question you're going to want to ask them. The next one you're going to want to ask them is, what's the loan to value, as we talked about? What's that percentage that you're going to want to ask them? And then what the questions are going to come is, do you fund any of the rehab money? Do you require any monthly payments? How much of a down payment are you going to require that I come up with? What additional fees and costs do you have? What I find is lots of investors are so worried about the fees and costs, they forget about this principle of leverage. And what I find is most successful investors are trying to leverage. They're trying to come in with as little money as they can so that they can make the best return they can on the money they actually put in. So that's some other questions you're going to want to be looking for. So I hope this information has been helpful. If so, please give me a thumbs up. If you have other questions you'd like me to answer, please put it in the comments below, and I would be more than happy to answer them. I've got a couple other videos I think you'll be really excited about. One of them is the easiest mortgage to qualify for. You can check out that video. I have another video that's what is a BRRRR deal, a BRRR deal. If you're not familiar, you're going to want to check out this video as well. Otherwise, if you need help, if you need tips, tricks, tools, software, knowledge, come check us out over at dohardmoney.com. Be happy to help you in any way that we can if we're a good fit for each other. And lastly, make it a very profitable day. Goodbye for now.